This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. So I guess today the futures look a lot different than they did yesterday, as I think yesterday we were down about 600 points in the Dow, and then within the first, 5-10 minutes dropped 1,000. Which actually was a decent tradable opportunity because it matched a lot of levels we were mapping out. And then by 10 o'clock, markets took back half. And then at some point, we almost went green before fading into the end of the day. And now today, futures are up, probably where we were down yesterday. So we'll figure out how to approach it. But first of all, overseas, Asia still hasn't bounced. The Shanghai was down, I think, another 8%. The Nikkei, which we talked about being cautionary on over a week ago and a few months ago, we were saying sell down another 4%. But in the last hour, we heard that, China cut interest rates again. So we'll see how it responds tomorrow. But our futures were up well before that news. We were pretty much following Europe. That was very oversold. And Europe right now is up, almost 4% across the board. So let's just take, two quick looks at overseas indices. First, here, the FXI. You remember how you could have maneuvered it. Everyone says, oh, how could you have seen it? What could you have done? Well, you know what? You had this parabolic move. Then all of a sudden, below the 8 and 21 day, when this broke 48, you could have got out of the way. And if you didn't get out of the way there's your 200-day moving average. What does Red Dog say? When you break the 200-day moving average, you get out of the way. And if you don't reclaim it, look out for more volatility. And this bear flag in the FXI gave clues that we were going to make a lower low below 38.80, and yesterday's low is now right here. So the FXI has a new pivot in around 32.80. Now I guess we'll see what type of bounce happens this time, if there's any at all. So if you did cover into the volatility, maybe there's a move back to 37.69-ish to play a bounce, if you want to do that. HEDJ, which is Europe, which is the DAX, same thing. You remember the first quarter we started, boom, really nice rally, nice trend above the 8-day, above the 21-day, and then here's where it gave way. And since then, became a choppy mess. Tried to break above its descending channel here. Remember we talked about it, came back, went below, and then this time broke below. And look at this, when this broke the 200-day. So when the DAX broke the 200-day and couldn't reclaim it last week, you had a lot of sell signals. You could have been out of this thing at 62-ish or 61 before being caught in the volatility all the way down to 52.45. So with that being said, you look here, I think some guys did go home long Europe on the close. And if you did, I guess you'll see, what kind of rally it could have. Maybe it gets up to this 58-ish. So if you did get short in here and you covered, I think a lot of guys might try and reshort this. And if you're playing for a bounce, first things first, this is yesterday's high, which is, 56.03. And then your next spot comes in a little bit closer to 58 and change. So that being said, our markets, I've been pretty much flat since last Wednesday when we broke or started to break that upper range, the range that we were talking about, the range that was monotonous. And then Thursday you had your confirmation of that when it broke and closed below 2040. So when ranges resolve, what you want to do is you want to look for the measured move, and then sometimes you get an overthrow. And yesterday, quite a big overthrow. So anyway, you go to the SPX, and you will see, here is the range that we've been talking about for so darn long. And thank goodness we might not have to talk about it anymore, which we probably won't. But in this range, lots of things were breaking down, giving you some clues. And then finally, this range within a range, you had to be aware if we were to get below the 200-day again with a decisive move. If you haven't already, you get out of the way. So anyway, we're back and forth, and then all of a sudden, here. Okay, look at this. Remember this day? How could we have seen this? How could you have been out of the way? How do you embrace volatility? Well, when this broke and resolved this entire range to the downside, that was your clue. If you didn't take it here, when we broke below the 8 and the 21-day moving average to get out of Dodge, and then you would have been out of the way for Friday, which was a disaster, and then you wouldn't have been caught in that 1,000-point move yesterday. You probably could have bought, which some traders around here did, which wound up working out pretty well. So anyway, question is what now? Okay, you have lots of broken trends, lots of damage. You draw from here basically, and this was your trend that broke. What do we have now? You basically, I think we went even a little lower. We held this October low. So now you want to see what type of bounce do we have. And today with the futures up, this is what you want to look at. If you are long overnight, and I'm a little long the spiders, I'll get into that after. I always sell some on a big gap up, and then I try and figure it out. Resistance 1, 1965. That is one spot. Okay, right there, that is one spot of resistance. We might see that today. Some traders might try and short in front of it, but if we go above it, you probably could squeeze. All right, resistance 2 comes in a little bit under this 2000. Okay, which is a little bit closer to like 1980, 1990, 2000. So, this would be a spot that chances are for an oversold bounce with the oscillators minus 90 yesterday to go back to almost zero, you probably get here. So resistance 1, resistance 2. And then if they really have the power, which obviously I don't think would be today, would be within a week or so, and they want to come back up, the bigger resistance now stands closer to this 2040. So 1965, resistance 1. Maybe today we don't even get there. We have an up day, and then we get above that, which would be a pivot to squeeze for another additional buy. Resistance 2. Remember, old support becomes resistance. And then here is your resistance 3, which would be a retest. Now, if you go to the spiders, okay, because a lot of us traded, and that's what I'm long. Oh my goodness, look at the size of this move lower. Boom. Okay, so here, yesterday's high, which I want you to write down, is 197.47. So pretty much this is yesterday's range. So if it wants to stay within this range, okay, it probably pauses at this high. I don't know if it could have the strength to take this out today. Maybe, today's gains hold. So you also want to see how big of today's gap. We're up about 4 or 5 points in the spiders. You want to see if they pull them in. Could we hold 50% of the gap, which would give us a little bit of power for maybe a little bit more continuation? But we shall see. So resistance 1 is here. Okay, that's 197.48, which is very close to where your old support was. And then really, your major resistance comes in closer to 204 with that stop, with that little spot of 202 there. So resistance 1 area, resistance 2, resistance 3. Okay, and obviously this trend, or the upper trend was broken. Here's a bigger, more macro look there. So you take it closer in here, and you will see, that's yesterday's range, the crazy range. High, if they push above this in the next few sessions, you have that. And then obviously major comes in now at 202.18 and then there. So we shall see. But it'll be interesting to see, again, how much of today's gap holds. Will today be that gap and go where we open up 4 points or 5 points in the spiders, hold there and close up 7 points? Or do we open up 4 or 5 points and then close up 2.5 points or so and put a doji in, and then people will be like, that was a pretty feeble rally, and then we'll see what's next. You could use the same concept, which is, I think you have to. I wrote a whole note this morning talking about every sector where yesterday's high is, because a lot of traders might want to come in and say, you know what, everyone's saying we're crashing, we're up today, I'm just short in the open. Well, you better be careful just short in the open, knowing how far we came and the pivots we have room to, and one of those pivots are yesterday's high. Another measure of the strength of this rally will be, can we actually get above yesterday's high in any stocks and any sectors to show us that there's some power here, so then you also where we could go potentially. So the next spot, just say the Qs. Look at the size of that travel range. Oh my goodness. Went all the way down to this pivot. So when the Qs went through that October low. So it went actually even further. And now, same kind of thing here. You're probably opening up a little bit below yesterday's high, right down 102.53. That will be some resistance. If, whether it's today, tomorrow, we get through this, your next spot comes, a little bit closer to where we broke down from, which was right into this resistance zone of 105. So again, resistance 1, bigger resistance. If we open up today and, they sell it off, we want to see how much of the gap holds, and, you could probably, actually, you can't even really, just there's a big gap there. Use your retracement. It's in there as far as how much it holds. But anyway, that's resistance 1, resistance 2. And I pretty much could do this with anything. You look at any chart, and the candlestick is huge. So, but between where we are now on this gap open and yesterday's high, there's room. That's why you don't want to just fade the open. And if you're trying to play a bounce and you're not long, you have to figure out maybe if they do bring us in, like the spiders open up at 195, they bring us into 193, we come off that pivot, you'll probably see me tweet saying, spiders just pulled in 195 to 193, it's now 193.5. If you want to buy here versus the 30-minute pivot of 193, you're risking 50 cents for what could be a better bounce for the rest of the day. But if it breaks that, it could fill more of the gap, and then that's how you maneuver that. So anyway, go back to the chart. Here's the Qs. IBB, very similar. Big move yesterday, big range. Typically, that leads to bigger ranges and more volatility. But as of right now, here's yesterday's low. If you remember, we talked about this trend breaking there, talked about the head and shoulders top with the left shoulder, the head, the right shoulder. Well, it broke below the 58 and 21 days, so no one was caught in this mess because we do not hold stocks that are below the 8 and 21 day for a swing. We get out. Some people actually get short. That was a nice pattern. So big move. Here is the same thing. This is yesterday's high, 340. I believe it's around 335. So here is yesterday's high, 340.23. How does the BIOS handle that? If it pushes above, there is resistance 2, probably around here, which is 351, and then where it broke down from. So resistance 1, resistance 2, big wall of resistance. If it opens up and fades down, it might need some time within this candle, before it sets up what it wants to do next. If it stays within this candle, just like everything else, and can't even get above yesterday's high and starts to close in the lower end, some people will start thinking this is a bear flag type of scenario versus, more of a bounce. That could take us slower. As of right now, nobody knows, except for if you did buy in the hole, you're getting paid on this morning, and you could trim some and then see what happens right around there. IWM, the same thing. Not going to fully get into it. This gave you major clues to sell. You had this false breakout here at 127, a lower high, and then this thing broke below the 200-day well before the S&P, giving you clues not to be in this thing. Okay, it didn't even really have a good day yesterday. But anyway, here's your pivot low, and your resistance 1, where it might be able to try and bounce towards, is close to 114, and then bigger resistance comes in a little closer to 117. So the question is, what type of bounce back do we have to then give us clues, the action moving forward into September and August, or September and October, I'm sorry. Now, as far as stocks, yesterday I talked about just trade stocks that are leaders of every sector, that have volume, that have liquidity. So my number one thing I looked at yesterday was Apple and Facebook. And Apple did great, actually, yesterday. It led the market off the lows. It actually went green and pushed. Doesn't mean Apple's going to make new highs in the next few weeks, but it was a nice trade yesterday. It came right into this lower area. There was that zone we talked about, in here, and bounced off it first. Now the question is, again, what type of bounce is it going to have? You have yesterday's high right there, so there's really not that much room before you get a wall of resistance. Remember this channel here? Gap down after earnings. You had your bear flag right within here, and then you had another bear flag here, and then pow. So now the question is, what type of bounce do you have? And yesterday it was the strongest name out there, so it deserves to be higher. Now the question is, can it stay above 108.80 and then maybe test a little bit higher into 111, 112, or does it fade back in here and need some more time? Unfortunately, I didn't take Apple, but Apple was very good to us yesterday on the VTF, But anyway, see how it handles this zone, and then here is your your playground of what it could trade at before major resistance comes back in around 112-ish. And then you have all the moving averages obviously still pointing lower. So it's still been just more of a trade than a hold. And if you've been investing in it for a decade, then it's been a good investment for you. But for us, we traded and it broke below all the moving averages here. And it's been a better short than a long, except for yesterday. Good opportunity. The next thing that was good to us, or, would say some guys were trading, was Netflix. Netflix, leadership stock. This one is a lot thinner, not the easiest to handle. But if you sold it when it broke the upper flag, okay, remember this little red dog reversal right there, pushed through and couldn't make it. I was actually thinking that day maybe it goes because the market looked okay, and then it didn't, so get out of the way. Then right there you could have said, oh, maybe I'll, it's below the 8-day, and if you didn't, that was your day to get out. And I understand, getting out here sometimes hurts, but getting out there hurts a lot more, and getting pushed out here is even worse. So if you were out of the way, I don't think anyone was long Netflix, that was a vehicle for some. It actually held above the 200-day. So now the question is here, with it up $7, what could Netflix do? Right down 109.63. If it gets above that, I probably wouldn't be chasing this, but I wouldn't short this little spot because, Netflix could push the envelope a little bit, and if that's the case, there's bigger resistance around 112.5. So we'll see what these key names do at yesterday's highs to see if there's any more power to push above, or, do they fade the opening move and then, it's back to just playing that range. You could say the same thing for Google and Amazon. Google was looking good until that day. Remember how it was flagging, looked like the market was hanging in there, and then all of a sudden on that Wednesday of the Fed minutes when they said they were going to put off liftoff versus liftoff, people said, uh-oh, economy might not be that good. And then that was your way out right there. That engulfed this range. Okay, and then boom, that was your, okay, I missed this, let me get the hell out of the way now, and some people probably got short even, and then yesterday, boom. So what did it do? It filled the gap, and now it's going to just need time. Here's your low, same kind of thing as everything else. Here's yesterday's high, 644. If it gets above 644, before you, I guess, start shorting it again or looking to just fade it, or if you're playing it for a bounce, 651-ish is a spot. So $6, $7 above yesterday's high, and it's probably not there yet. So pretty much it's the same story for a lot of these names. Okay, they had big ranges. They gave you sell signals last week, so if you came in flat and bought it in the hole, great. If you took some home long, you sell half on the open. If you're flat and you're looking at these names, if they come in first, see how big of the gap stays there. Trade versus that 15, 30-minute pivot. And if it happens to have enough strength to push to yesterday's highs, see if they can get above it and squeeze, and then know where the next spot to get out is. Facebook, very similar also. Facebook, was looking pretty good right here. That's when the market looked like these four stocks might be able to hold the market up, and then it changes quick. 8 and 21 day right there. So what happens when you break the 8 and 21 day? Like that, you get out of the way. What did this do? Engulf the upper range. If you got out here or got short here, you got paid handsomely or you didn't get hurt. Then yesterday, wow, what a range. Okay, so very similar here. This is the bottom. Oh, let me talk like a broken record. Here is yesterday's high. If it gets above 87, chances are maybe you get a gap fill at some time, closer to 90. So we'll see what happens. The best thing would be, an inside day or so, and then it trades through that, but we'll see. So we'll see if any of these stocks can get above yesterday's high and show some power. That would give some clues of the market bounce being a little bit more powerful versus feeble, meaning we can go up to resistance 2, resistance 3, besides just opening up today and just falling apart. So we shall see. Plus, this can go a few days. The oscillator was minus 90. So we were up before, the news out of Asia, and we were up with Europe. So if we have an update today, and then tomorrow, China responds well, chances are we might have another update or so. So let the oscillator burn off. If you're picking short areas, make sure it's in key spots. And if you're looking to be long, you just also key spots. And I guess what's the moral of the story? Key spots. So, moving forward, the banks didn't give us much to work on except for they've been weak. Goldman Sachs has been below the 200-day, very weak. See if I guess a bank could take out yesterday's high if it can. There is a bit more room up to there. That's your Goldman Sachs. The XLEs yesterday put a new low in, okay, and oil's bouncing a little bit. I don't think that you need to really look here, but some people might have yesterday. Again, just want to show you how you could avoid pain. Look at the head and shoulders top in the XLE right here. Left shoulder, head, right shoulder. This is when it broke the neckline. That's when it broke the 200-day right here. Did it get back above it? No, it stayed below it. So you could have been selling this thing at 90 and been out of the way and taking absolutely no pain. And then obviously it gave you, support levels to trade against and, maneuvers to be made. But this is when active traders say, no more of a swing trade. This is when institutions say, it's not investable. And at this point, maybe you had some kind of capitulation. If you look at yesterday, you go to basic study, go to volume, and there was some big volume yesterday on this last decline. So I guess see if it could help support a rally. If it gets above yesterday's high, there's some resistance. Maybe it has some room, room back to 63 to 65. I doubt I'll be playing this sector at all. I'm better off, sticking with what I know. As far as the TLTs, they gave you a little clue that the market could rally today. Look at that, opened up, sold down, and it sold and closed on lows, even with the market coming off at the end of the day. So that gave you some clues that this rally from this spot here, was overdone. Okay, so now you'll see what type of pullback does it have. Can it maybe hold this 123.50? So if you sold it on this with the red dog reversal here after a big move, see what happens into the 21-day, and then you have the 8-day right there, which I do believe it's below now. So with all that said, I'm not saying the market's out of the woods. Okay, you never know. Big breaks like this sometimes lead into bigger breaks. But if you sold correctly last week as an active intermediate trader, when the 8 and 21-day was gone, and every sector was below the 200-day, what are the rules? In healthy markets that have momentum, you're above the 8 and 21-day. In healthy markets that aren't under such pressure, you're above the 200-day. And coming into yesterday, the Dow was below the 200-day, the S&P was below the 200-day, the Russell was below the 200-day, you name it, everything was below it. So if you weren't in stocks, you know what? You were in the right stance because technically we were weaker. So you had the opportunity to buy yesterday. And now we have a little bit of a bounce, and we'll have to measure where it goes. It's the last week of September. Maybe we burn off the oversold condition and we head up back into old support that turns into new resistance, and we make some money and then figure out what's next coming into September. So I'm happy to see, new ranges, new volatility. And I'm going to go right now before the fire marshal tells me I have to go downstairs. It's almost like the hook. I'll talk to you at the recap.